Cathie Wood, CEO of Ark Invest and a known Tesla bull, has always been a proponent of investing in innovative companies with long-term growth potential. And despite the recent decline in the technology sector, Wood remains bullish on Tesla, recently buying up millions worth of the company's stocks during a dip in the market. So today, let's take a look at Cathie Wood's strategy when buying Tesla stock. It is difficult to predict if Cathie Wood, CEO of Ark Invest and a known Tesla bull, will remain bullish on the company if its stock starts crashing. Wood has previously shared a 5-year target for Tesla ending in 2024 with a base case of $7,000. She has stated that they arrive at this price by weighing the probabilities of 10 different scenarios, including bankruptcy. However, Wood's Ark Innovation ETF has lost 57% of its value in 2022, and the technology sector has been one of the worst performing sectors in the market. Despite this, Ark's ETF has still more than doubled since its inception in 2014, highlighting the importance of ignoring short-term market gyrations and focusing on the big pictures. Wood is also known for investing in innovative companies with long-term time horizons and for timely buying back shares when the stock dips and selling some off after it rises higher. Over the past several months, Wood has been stacking up her Tesla shares whenever the stock dips low. In fact, Ark Invest bought up millions worth of Tesla a few days ago during the electric vehicles maker's worst daily dip in more than 2 years, as Wood continues to double down on what initially brought her riches. Wood's flagship Ark Innovation ETF purchased 145,000 shares of Tesla worth $15.7 million at the automaker's $108.10 closing price several days ago. Meanwhile, Ark's Autonomous Technology and Robotics ETF nabbed a further 31,000 Tesla shares worth $3.4 million. According to daily transaction reports, those purchases came during Tesla's 12.2% drop on January 4th, its largest single-day decline since September 2020. Moreover, the stock is now down nearly 75% since November 2021. Wood, who invests in companies engaging in disruptive innovation, made millions amid Tesla and other favorites surge in the early days of the pandemic before a brutal 2022 sell-off wiped away Ark's gains. Ark owns about $487 million worth of Tesla, its fifth largest holding, most of which is in its signature ETF, which has added more than 300,000 shares of Tesla to its portfolio over the last month. The market is not doing well because of technology and high interest rates, and Tesla stock went down when Elon Musk started spending more time and money on Twitter. Wood has remained bullish during the downturn, predicting last month that Tesla shares would reach $1,500 by 2027, representing a more than tenfold increase. Now, before we continue, I'd like to thank you for getting this far, and if you want to know more, then make sure to watch this next part. And according to Wood, there are 3 sources for the increase in their estimated price target. The first is the emerge of the Tesla killers in the market. Wood and her firm expected Tesla's market share to go down from 17% globally, including China, to something lower. However, it instead went up to 18% in electric vehicles. According to Wood, this is because Tesla is just so far ahead of the pack, and I'm talking about the BMWs, the Mercedes as far as range and other important metrics when it comes to electric vehicles. She also added that Tesla's battery cost is 3 to 4 years ahead of any other auto manufacturer in terms of cost declines. So, every other auto manufacturer will, if they want to be competitive with Tesla and be competitive in the electric vehicle market, they are going to have to catch up with Tesla in these metrics. The second source is Tesla growth in the energy market. Tesla has been investing in solar and storage solutions, which Wood believes will be a significant source of revenue for the company. According to Wood, Tesla's energy storage solutions are 10 years ahead of the competition. This will give them a massive advantage in the energy market as more and more countries and businesses move towards renewable energy sources. The third source is Tesla's expansion into transportation and logistics market. With the development of its electric semi-truck, Tesla has the potential to disrupt the transportation and logistics industry just as it has done with the automotive industry. Wood believes that Tesla's electric semi-truck will be more efficient, cheaper to operate, and better for the environment than traditional diesel trucks. This could lead to a significant increase in demand for Tesla semi-trucks and could also open up new revenue streams for the company. Cathie Wood's investment strategy is based on the principle of disruptive innovation. She looks for companies that are engaging in disruptive innovation, which are companies that are changing the way industry operates or that are creating new markets. She believes that these companies have the potential for long-term growth and have the potential to generate significant returns for investors. Furthermore, one of the key characteristics of disruptive innovation is that it is often difficult to predict. Companies that are engaged in disruptive innovation are often operating in the new and uncertain markets and are often facing resistance from established players in the industry. This means that the potential for growth and returns is often difficult to predict and can be highly volatile in the short term. This is why Wood's investment strategy focuses on long-term time horizons. She believes that investing in companies engaged in disruptive innovation requires a long-term perspective because the potential for growth and returns may be not realized for several years. Wood's investment strategy also involves buying shares when the stock dips low and selling some off after it rises higher. This shows that she is not swayed by the short-term market volatility and is more focused on the long-term potential of the company. In the case of Tesla, Wood has been a long-time proponent of the company and has consistently invested in it even during times of market downturn. She has stated that she believes Tesla is a company engaged in disruptive innovation and that it has the potential for long-term growth. And despite the market downturn in 2022, Wood has remained bullish on Tesla, even increasing her investment in the company during its worst daily dip in more than 2 years. However, it's important to note that Wood's investment strategy is not without risk. As with any investment, there is always the risk of loss, and investing in companies engaged in disruptive innovation can be particularly risky as the potential for growth and returns is often difficult to predict. Additionally, Wood's investment in Tesla are not without risk. It's because Tesla's stock price is highly volatile and depends on various factors such as company's financial performance, market trends, and global economy. And so, Cathie Wood's investment strategy is based on the principle of disruptive innovation and long-term time horizons. So, what do you think of her strategy? It is worth the try? Make sure to drop your thoughts in the comment section below, and while you're at it, make sure to smash the like and subscribe buttons as well. Now, if you want to know about other companies Cathie Wood is investing in right now, then make sure to click and watch this video right here and enjoy. And that's the end of this video, guys. See you next time.